Let's get straight to Kumar Infra. Earlier this year, they upped their order inflow guidance for FY24 to around 15 to around 16,000 crore rupees. The company has beat this order inflow guidance with the current order book in excess of 16,000 crores. The company is also eyeing over $1 billion of revenues by FY27. To help us out with an update on that front, Mr. Nalin Gupta, the Managing Director at Kumar Infraprojects, who joins in. Hi, Mr. Gupta. Good morning, and thanks so much for joining in. Well, your stock as well has bounced back in line with the market, and we want to get a couple of details going. So tell us, what is your revised order inflow guidance? Where does your order book stand at?
Well, so Nigel, we have already bagged orders worth around 20,200 crores in total. And in this year, we have bagged orders worth around 11,500 crores, and which takes our order book to around 20,200 crore as of today. And we expect to maintain an order book close to around 18 to 19,000 crore by the end of March 24. And with the ongoing revenue that would be consumed for Q4. So I think we are sitting at a quite healthy order book, and we expect that our target of 4,800 crore that we have given for FY24, which is a 15% growth as compared to the FY23 revenue. So I think we are quite comfortable to maintain that.
And how about FY25? What's the kind of orders that you're targeting in FY25, Mr. Gupta? And how much of that will execute into revenues?
Well, so in FY25, we expect a growth. We had earlier given a guidance of around 15% for FY25 as well. Though you would appreciate the base keeps increasing, so the 15% growth also makes a value addition to it. But we expect with the current order books that we have bagged, we should be having some 1 or 2 basis point extra by making around 16 to 17% growth in the top line for FY27. But I think that will be more realistic if we talk about it after Q1, where we really understand the inflow of the revenue coming in from the new orders that we have bagged.
No, and order inflow, what is it that you're targeting in FY25? Just wanted to understand, because I'm sure you would be participating in a lot of them. Are you in, are you L1 in a bunch of orders? If you could give us a sense.
Yeah, so we have already been L1 in around 800 crores worth of projects additionally. And and for the coming year, we are in the, there is a bid pipeline of around 35 to 40,000 crores that we should be bidding in 6 to 9 months time span. So I think means bagging orders to the tune of around 7,000 crores approximately should be quite comfortably that the company is looking at.
That's in the first half.
That's for FY27 that I'm talking.
27 or 25?
25.
7,000 crores is the order inflow target is what you're looking at for FY25.
Yeah. 7 to 8,000 crore is what we are eyeing at for FY25. Okay. Yeah.
Got it. And that $1 billion revenue target, that's on track, right?
Well, with the order book that we've already bagged, making us at an by the end of FY24, we should be clocking a order book net of around 19,000 crore. So we are very much confident that our target of being a $1 billion revenue company by FY27 is a quite realistic picture for us. And we feel quite confident we will achieve that.
Yeah, actually, and the street has taken note of that, because I recall when the stock price may be half of what it is currently, you had put out that projection, and now the street is tracking you, and it appears, going by what you're saying, it appears you have a plan, and that plan is on as well. What about competitive intensity in the sector, and what should the margins look like, give and take everything, the competitive intensity, the volatility in input cost?
Well, I would say the volatility in terms of the input cost doesn't really bother, because all the contracts that we have bagged and of the entire 20,000 crore comes in with price variation and escalation clause. So it's like a proper pass-through. So there is no concern with regards to that. And yes, to talk about the competitiveness, there is quite the competitiveness still maintains. I would say it is still maintained. But I would say that the areas like where Kumar is trying to focus into, like the bigger ticket size of projects that we have bagged in this fiscal year as well. So that gives, I think, a fair amount of competition. I wouldn't say there is no competition or very heavy competition, but there you are dealing with all the large cap companies and mid cap companies where they understand what is the realistic price. So I think it's a quite fair, I would say, competition that's happening. And we are very comfortable to maintain a EBITDA margin of 14 to 15%. Even 0.2%, there is an improvement in terms of the margin in this fiscal year. So
Right.
we are very confident of maintaining that.
Yeah, just before we let you go, Mr. Gupta, just a couple of questions. This is with regards to your cash flow statements and balance sheet as well. What is typically your receivable days in the projects that you do, since you deal with the infra sector, which has delays in payments, etc. as well? The working capital debt that you have, how much of that will you, continue to add? How much will you repay, etc.? And you recently acquired Pranav Construction Systems as well from the NCLT. Did you have to take on any debt? What does this business do to you?
Well, so we are not required to take any debt for it. And that business is basically related to the business operation that the company has been doing. So that company basically makes molds and specialized molds, shutters that we require for all our metros, flyovers, and all these businesses. So that's how we have acquired, and we do not intend to take any debt for that. Currently, we are at a gross debt of around 622 and a net debt of 82 crores. So we are at a comfortable debt equity ratio of 0.24. So, and at net level, we are a debt-free company almost, we can say. So I would say that with the growing order book, we should be able to more or less stick to the debts where we are, though there would be some capex that will be surely required for taking up this large projects, which are of like the GMLR, as we have already mentioned earlier. It's one of the largest tunnel ever constructed in the country. So we are going to buy one machine on our books. So that would be around 300 crores additional capex that should happen in the next 2 years span.
And receivables, very quickly?
So receivables, if you see, we have been able to improve our, we are looking to maintain a working capital cycle of 120 to 125 days. And even in the recent period, we have reduced it by around 7 to 8 days. It has come down in this fiscal year.
Okay, all right, Mr. Gupta, appreciate you joining in. We're going to hold you on all these numbers and these targets that you've given. And Mangalam and myself, we are sending out a plea. Please keep the work going. We want to see better traffic, a smoother operation of traffic. So that's a plea from our end. We look forward to chatting up with you in the coming months as well. For the time being, we slip into that break. Come back, continue focus on markets. Well, thanks so much for tuning in to CNBC-TV18. Make sure you follow us and stay updated on all our social media platforms.